All right, so as I'm looking at this chart on this Saturday night, which is a chart and chill night for me, right? I usually do my studyings on every Saturday, and it's something that I notice when it come down to understanding the timing of of the market structure and when to get in and when to get out, and understand when price is going to reverse or continue in this direction, right? And for those who've been watching me, just kind of get the idea, concept of how I trade. So I use the weekly and daily as my directional bias. I use a daily time frame to confirm my weekly. Once them two time frames align, then that's like that gives me my directional bias for the week, right? I'm a swing trader, and I use the 4 hour as my entry model. So the 4 hours where I do most of my confirmations, right? And I was asking myself this. So like for example, right now I'm looking at yen and I'm looking at DXY. So you got yen on my left and DXY on my right. So when y'all look at this video, it should be yen on your right, DXY on your yen on my left and DXY on the right. So when looking at yen, we can see that yen is in a clear down direction. When looking at US dollar, we can see US dollar is in a clear up direction. Now, for those who don't know, that when the reason why DXY is so important, which is the US dollar, it's important because when you're trading pairs like yen against the dollar or or UJ or GU, if the US dollar is in an up direction, then what that mean for other pairs like UJ? That means UJ should be in up direction. What that mean for GU? That means GU should be in a down direction. I mean EU should be in a down direction. So it helps out understanding stuff like that. Even like stuff like gold. If you know DXY is constantly pushing strong, that can put pressure on gold. So just stuff like that. That's why I watch DXY very important, right? But so just kind of idea of concept of my trading style is give you a clear example. When the weekly candle closed bearish, right? I expect the next week candle to retrace up and go back down in that down direction, and vice versa until it begins to change candles, right? So the question that I had right when I was doing my studying, right? I'm like, okay, look, for example, we can see here this candle here closed bearish right here. If you follow the mouse, this candle here had closed bearish, right? And typically off of that next week, we expect price to retrace up a little bit, make a breaking structure, and start going back down, right? But clearly, I didn't get that. Price ended up closing bullish that week, right? But if you follow the circle, right, so on the red one, the first candle of the first red, when that was closed bearish, right, we can see down here at the RSI that we was oversold, right? So usually when the RSI is oversold, price can either do two things. It can either retrace and continue going lower, or it can reverse. So obviously, like I said, I study a lot on the 4 hour because that's why I trade my entries on the 4 hour. So I'm looking at this, right, and it caught my attention that when price is oversold on the 4 hour, now this is specifically the 4 hour, and I'm pretty sure this same thing can happen over time frame, but this is based on, my style of trading, right? When we're oversold on the RSI, well, I know this is right, you can expect two things on the RSI. It should either come back up to the baseline, which is around 50, and come back down lower, or it can either push all the way through, becoming oversold, which is anything overbought, which is anything 70 and above. That's considered overbought, right? And we expect price to go back in this direction. So in this case, when we was oversold, right, we expect the price to retrace up, right, and then reverse back down. Price never did that. It kept going up, right? Closing bullish for the week. And when we close bullish for the week, trading the high of this week, which is where this blue circle at that same time, and we kind of go back down, line up with that, we can see how price was also overbought, right? But if we look at the structure, right, we can see that once price made a clear breaking structure, it never broke back above the recent high. It never got back above that. And you can see that after that, we just kept pushing back down lower after price was overbought. Now, if you see right when price is overbought, right, you can see, okay, hey, we traded the same thing. It was oversold. So if we look at the low of that week, next week we closed bearish. Now, typically, when price closed bullish, now my question is, okay, look, when price closed bullish, now I'm thinking, oh, dang, okay, we closed bullish. So are we going to retrace down and then continue to go up higher? No, price end up going bearish next week. So this is where my question came in now. I'm like, damn, hold on. And we end up closing bearish this week, but then the next week we end up closing bullish because I'm expecting the price to retrace down, but we didn't. We end up closing bullish, but then the week after that, we end up closing bearish. I'm like, hold on. So how do I know? My question was, how do I know if this was going to be a true reversal? Because sometimes price is not always pushing up to reverse. Sometimes it's pushing up to retrace back into a resistant level to come back down lower if it's in a true down direction, right? In this case, right, you can see that, okay, that was this case. Price to retrace up. And once I realized, I'm like, okay, well, how do I know? Okay, well, the RSI is overbought. When the RSI, now I can't say sometimes when the RSI is overbought, sometimes price can just keep pushing. But when price was overbought right here, right, I noticed that, okay, we started making that shift. Once we made that shift from being overbought, towards the end of the week, going to that next week, we actually end up dropping. And when we drop, we made a lower low, right? We back in this down direction, right? We oversold. What happened to the next week? Well, when we came to the next week, what happened? Price ended up retracing up into where it just broke out of. So I'm gonna draw this out. So if you look, that's this right here. So all price did was made this low, made this swing low, made a swing high, and made a lower low. So we look at it from a structure standpoint, price had to come back into this level right here. That's why I said you can't just look at the candles by itself. You have to look at structure as well with it. So when you look at the structure as well with it, you will see that you will see that this resistant level right here, right, is an area where price broke out of to come back to. At the same time when that happened, guess who was that? Who was overbought again? So right then and there, that kind of gave me a clear insight to understand that, okay, hey, price, there was just a retracement because it's overbought now. There was just a retracement to see price go back down lower. And clearly once it did that, it made a clear breaking structure going to the next week. Now, the reason why I have a golden level right here, because this is using my golden setup. This is how price typically is supposed to operate. Like I told you before, when price is usually bearish, we can expect price to open or retrace up first, even push down first. It can still push back up eventually and then go back down lower. But point is, the whole idea is when the week close bearish, we can see price open, retrace up, and then continue going back down lower. That's the typical fundamental. So this time when it did it, right? And it's typically how it's supposed to be. It was oversold. Once we create that low of the day, it was oversold. And what happened? Price would trace back up to the around the overall baseline to go back down lower. You can say here, price open, retrace up, is at the baseline, go down lower. And you can see we had that same thing, right? When price was oversold, what happened? That next week, we didn't really got completely overbought, but it still was around that same baseline. Price barely moved. It was bullish that week. We're still underneath the 50-day moving average. That gave me a clear indication that next week we're gonna be bullish. It was just a retracement. So this probably don't really make sense to y'all, you know what I'm saying? But it makes sense to me. Like I said, this really is a self documenting for myself. And then obviously on the XY, it's the same thing. It's just the opposite. So like I said, I use the XY a lot too. So at the same time, vice versa. Same time when we was oversold on yen, we was actually overbought on DXY. DXY and doing the same thing. It retraced down, right? And we was at the baseline, and then price decided to push back up. When it pushed back up, we was overbought on the RSI. When that happened, price became oversold. So next week we pushed down. Price never came back up. It pushed down, right? Closing bearish, then it was oversold. After that, it was oversold. The next week it pushed back up in this direction. Even though we didn't break back above, it was overbought, and then price came down to the baseline. You can see how it opened, retraced down, push up. So this is just something that I just noticed, when I'm studying, and I'm still kind of, gonna probably do a little more study and see if I can see the exact same pattern, routine structure happening over and over and over again. Point is to say, what I'm trying to say is that because I trade from a candle base, right? What I have to understand is to know that, okay, hey, that when price push up, how we close bearish on this side, and then the next week we close bullish. What I have to understand and know is if this is a area where we can reverse go up higher, or is this just price retracing into a level to go back down lower the next week? And how can I know that is if that's the case, price should be over bar, because using prices over bar, price usually tend to, you know, push back down, especially in this direction. So that's just something kind of I noticed that I want to share with y'all. Just something that I'm kind of, keeping a case study for me. And other than that, I guess I'll see you on the next chart and chill whenever if I do another case study, if I find something interesting that caught my attention. But it's really for me. I just want to share it to y'all. So other than that, I will see you actually on the next video, which will be a market breakdown. Make sure you like, subscribe, hit the share button, so you can be able to get more insight on the market, so you can be able to trade smarter for each and every trading week.